Hi, my name is Onome, and I'm getting tired of saying welcome to Green Ticker Tales, but I just have to say it to this podcast because it's famous and I'll stop it. Today we're going to do a bit of economics. I am recording on Saturday, April 12, 2025. It's been the end of a crazy week in financial markets. Stock prices are swinging up and down. I remember last Sunday, Bloomberg, which is a financial channel, was broadcasting live, and they were monitoring pre-market, which is weird because, I can't remember. I think the last time they probably did that was during COVID. So it's been an exciting week in financial markets, but it's also been a volatile week, and people have also lost money. At times like this, I usually will get questions. I remember one of my clients asking me, should I not just sell everything I have and just go to sleep? What happens to Nigeria? How is Nigeria affected in this whole tug of war between China and the US and Europe and everybody else? I try and explain that in the next 12-15 minutes I have, and hopefully my voice is still alive, about how this affects Nigeria. I will take it from different dimensions. The first dimension, which is what most people care about, and since last year, it's topmost when people look at money, is the exchange rate. Now, last year there was a huge devaluation, official movement in the exchange rate, and that shook people. Some companies have not recovered. Some businesses have not recovered. Prior to the whole back and forth, expectations still remain that this year is going to be a much gentle year in terms of swings in the exchange rate. Nigeria's primary export, I think about 90-something% of exports, is crude oil. Luckily, crude oil isn't affected by tariffs directly. Indirectly, though, when you look at what's happening with crude oil, the crude oil price movement, the movement in the price of crude oil, is directly tied to sentiment, how people feel about the economy. And when you look at the top consumers of crude oil, China is there and the US is there. US, from all indications, will have slower economic growth, so that means fewer economic activities. Crude oil prices will dip. That's a long story short. If crude oil prices dip, it means that the government revenue will decline. But from an exchange rate perspective, if you have crude oil prices go to sub 60 or below $60 a barrel, that's when you're going to see some pressure on the exchange rate. And the pressure will come from two dynamics. It will come from the dynamic of, foreign investor, I've come into Nigeria to buy investments. I think the exchange rate is going to come under pressure. Let me leave. That's one dynamic that is kind of playing out. The second dynamic is, look, the world is going haywire. Nigeria is a frontier market, right? What you call a developing market. When there's uncertainty in the world, investors in frontier markets pull out their money and they go to safety. Safety, like I said in my video on gold, used to be US treasuries, debt issued by the US government. People are a bit panicked by that. So you're going to have that money move into other assets away from Nigeria. From a borrowing cost for the government, Nigerian government issues Eurobonds, which is dollar debt. If the US continues to face pressure as it is, at some point in time, it's possible interest rates will go up. And US interest rates are kind of like a benchmark because typically they are still are one of the safest investments to hold. So if they are borrowing at, say, 5%, it means that Nigeria is going to borrow way higher than that, because you have to give a premium. You have to adjust our borrowing rate, take into the fact that we are riskier than the US. So that's a source of pressure. For the rest of the sector, I mean, one of the interesting facts about Nigeria, and when you look at the Nigerian economy, I think oil is barely 10% of GDP. GDP means gross domestic product, right? Take the economic output in the countries. Oil, I think, should be somewhere around 9 or 10 or let's say 11%. So oil isn't very big in the economy, but oil has linkages. Major source of state revenue. State in this case, we're talking the federal government, state governments, local governments. For the banks, it's a major sector banks lend to, whether it's upstream oil and gas, midstream oil and gas, downstream oil and gas. I listened to a couple of calls last week when I recorded this, and the questions analysts were asking, hey, to banks, what price are you hedged at, or how do you see the happenings in oil and gas space? So if oil goes down to, say, a crazy level of, say, 30, 35, unlikely, but if 2025 has shown that anything can happen. It's still early days. But if you have pressure on crude oil prices, I wouldn't be surprised if that then filters into banks and their lending. And then you escalate it to petrol prices. Petrol prices have also been a source of debate. We've had a huge shock in terms of price movement. If I recall 3 years ago, I think petrol prices were what? It's 400 or 700 naira a litre. I don't have the numbers in front of me. Today is Saturday. So you had a huge shock in terms of price movement. After that, everybody started to monitor petrol prices. If oil prices go down, the positive is crude oil, petrol prices go down a bit. Now, the flip side is we still do some level of importation. The Dangote refinery still has some level of inputs, spares, and everything. So long story short is, while you may see a drop in the price of petrol, the exchange rate pressure, if it's higher than the pressure on the movement in the crude oil price, means that petrol prices could go up. So it has to be a balance in that case. And lastly, your day-to-day living, exchange rate goes up. I'm sitting in a studio. I'm sure that 90% of the equipment I'm looking at is imported, and we just don't produce these things in Nigeria. The cameras, the Canon lenses I'm seeing, the light bulbs, the data on which my phone runs is probably powered by a base station that is powered by diesel, which is probably from the refinery or some importation. So everything tends to filter into this. The next question I was asked is, what do I do? How do I prepare if things get tough? If you are reliant on, say, remittances, money parents, siblings, cousins, friends sends from the abroad, as we call it, if you are reliant on that, you may see that drop, because if people get laid off or they're endless, they can't send money. So if that's your major source of survival, you should expect it could drop. If you're the sender, I think it's also right that you kind of hint people, family and friends who are dependent on that money you send home frequently, that look, it's possible things might drop a bit. If you are employed, this is not the time to faff around, right? The US is kind of going to go through some turbulence. So if you're in the US, if you're in Europe, if you're just generally anywhere in the world, you want to take your job seriously. And even if you don't like the job, it's okay. You don't have to like the job, but if the job pays you, I think the right thing to do is to tough it out and take your job seriously. If you don't have any savings and you have some money left over, but you can't explain where it goes to after you paid your bills, I think this is also the time to sit up financially. And then lastly, I go to my primary domain, the stock market. For different sectors in the Nigerian stock market, crude oil price movements, volatility, some is positive, some is negative. Companies that run on generators or alternative power, their operating costs could come down a bit. For companies that are very reliant on government revenue, the first that comes to my mind is Julius Berger. I think over 60% of their revenue comes from contracts to state and federal government. If that dip, it means that they would also feel some pressure. Yes, I do know that they get prepaid for some of their contracts. But if money allocations to states and government goes down, they're not going to have that much money to pay. So for the banks, depending on where price of crude oil trades, if crude oil prices dip significantly below their hedges or postulations, then their oil and gas loans face pressure. If on the flip side, if they have dollar assets and the exchange rate moves, by the time you translate or convert those rates, so if you have an exchange rate moving from say 1.6 to 1.7, well, it means you have paper gains and the likes. At beginning of this year in January, I don't think anybody was expecting this kind of volatility, but I think in all certainty, it's not unlikely that, we could end the year at a maybe official rate of 1.6, 1.7, who knows? So that's how the ongoing Game of Thrones in the form of a trade war around the world rather, could affect you. Apologies if this video is too long. Apologies if there are just so many loose threads. The world is an interconnected place. Some would argue, well, Nigeria is kind of disconnected from the global circuit. Some would argue, and I'm in that school of thought, that Nigeria is partly connected. We probably have billions of dollars brought in by foreign investors who bought treasury bills and other form of government paper. If they all go out at once, your exchange rate to come under pressure. And Nigeria has had a tough year, last few years, when it comes to exchange rate movements and everything. And so it's normal that people tend to pay attention to those things. So I hope you find this useful. I hope it's interesting. I like to take a detour from stocks and let's do a bit of economics, because you can't talk stocks without talking about the economy. You can't talk stocks without looking at the macroeconomy, the economy as a whole, whether it's global macro, what's happening around the world, whether it's Nigerian macro rather. So have yourselves a good day ahead. Any questions, please drop in the comments, follow on all social media handles, and all the best.